you wake up. Sunlight spills across the marble floors of your custom-built mansion. Your net worth just crossed $200 billion. A rocket company, an electric car empire, a social media platform. You're by any measure one of the richest people on Earth. And yet, this year, your taxable income is zero. Not because you're breaking the law, not because you're hiding money in offshore accounts, but because you're playing a different game entirely. A game the ultra-wealthy have mastered. A game called the Billionaire's Loophole. And once you see it, you can't unsee it. It's a system designed to keep the rich, well, rich. Most people think wealth means cash. They think billionaires have giant bank accounts overflowing with money. They don't, not really. Your wealth isn't in cash. It's in assets, stock in your companies, real estate, art. These assets appreciate, they grow. Here's the crucial part. The IRS doesn't tax you on unrealized gains. That means as long as you don't sell your Tesla shares or your SpaceX equity or your vast land holdings, that growth is completely tax-free. You're a paper billionaire, richer than entire nations, but with a taxable income that looks suspiciously like a college student's. It's the ultimate magic trick, a legal one. But you still need cash, right? To buy another mansion or a yacht or social media company. You can't live on paper wealth alone. So what do? You don't sell your assets. That would trigger a massive capital gains tax. Instead, you borrow. Banks like Goldman Sachs or JP Morgan are more than happy to lend you billions. Why? Because you're putting up your appreciating assets, your Tesla stock, your SpaceX shares, as collateral. It's called a securities-based line of credit. The genius of it? The IRS doesn't consider borrowed money to be income. Billions in cash. Tax-free. You pay a low interest rate to the bank, maybe 2 to 3%, while your assets are growing at 10 to 15% a year. It's like getting paid to take out a loan, a very, very good loan. Almost too good to be true. Elon Musk, for example, famously pledged roughly $62.5 billion in Tesla shares as collateral to secure a $12.5 billion margin loan to help finance his purchase of Twitter. This isn't some secret handshake deal, it's standard practice. And it's perfectly legal. The kind of legal that makes you wonder, how is this even allowed? So you're borrowing against your assets, living large, and your wealth keeps growing. But what about that loan? Eventually you have to pay it back, right? Not exactly. You don't pay it back with cash from selling assets. You pay it back by borrowing more. As your assets continue to appreciate, your collateral grows. The banks are happy to extend your credit line or give you a new, bigger loan to pay off the old one. It's a perpetual loop. You never actually pay off the principal with your own money. You just roll the debt forward forever. A beautiful tax-free dance. A never-ending waltz with the tax man? This is where the game truly gets wild. You've lived your entire life off borrowed money. Never selling your assets. Never triggering capital gains tax. Now you die. Sad, but financially brilliant. Because in the U.S. tax code, there's a provision called the step-up in basis. When you die, your heirs inherit your assets, but their cost basis, the original purchase price for tax purposes, is reset to the market value on the day you died. It's like a financial do-over, a clean slate for generations. If a billionaire bought stock at $2 a share in 1997, and it is worth $180 a share when they die, the heirs inherit the stock with a new cost basis of $180. If the heirs sell the stock the very next day for $180, they owe zero capital gains tax. Decades of massive untaxed wealth growth are permanently erased from the tax system. Your heirs can sell everything the next day and pay $0 in capital gains. The tax bill, it just vanishes. This is the die in buy, borrow, die. The ultimate, perfectly legal tax avoidance strategy for the ultra-wealthy. The final, elegant escape. A loophole as wide as the Grand Canyon. This strategy sounds foolproof, but there's a catch. A terrifying, wealth-destroying catch. The margin call. The entire system relies on your assets continuously growing. What happens if the market crashes? If your Tesla stock plummets, the bank will demand more collateral immediately. If you can't provide it, they'll liquidate your assets forcefully at a loss. This is what happened to Bill Huang of Archegos Capital. He borrowed billions against highly concentrated stock positions. When the market turned, he lost $20 billion in 2 days. The game is brilliant, but the stakes? Astronomical. A single wrong move and it all collapses. A financial house of cards. So you've seen the playbook, the buy, borrow, die strategy. It's not about tax evasion. It's about tax avoidance, woven into the very fabric of the financial system. It's why the ultra-wealthy can accumulate vast fortunes while paying little to no income tax. It's a game of leverage, timing, and understanding rules most people don't even know exist. A hidden game. A secret society of financial maneuvers. And once you see it, you can't unsee it. Make sure to like and subscribe for more money hacks.